Hello everyone. Today is the 7th of March 2014, and again we'd like to welcome you to MegaTrade101.com video presentation on the foreign exchange market. This video supports our March the 5th market view analysis basing on the price action and the market behavior of the cross currencies in relation with the current market conditions. However, we'd like to provide you with a short recap that this all basically started with the significant decline in the US dollar, which has caught a lot of market participants covering short positions when the dollar suddenly tried to recover back to the 80.27 basis point. And that was because the US government's trimming down its fourth quarter quarterly growth estimate, which initially dragged the US dollar index down to this level of 79.69. However, today we can see that the US dollar index have already penetrated its price level and currently working at 79.57. Of course, the key price levels that we're looking at is in the area of 78.80 to 79.05 levels, which in turn may meet some liquidations from those who had earlier shorted the dollar against most of the major European currencies. However, on the contrary, we know that the most of the other speculative positions based on the commitment of traders report and some of the sentiment index where most other traders were caught flat-footed on the short side of the market as far as the euro and the pound is concerned, as most of the other technical indicators have reflected more of a biased negative outlook. However, right now what is more important is the US dollar's decline, which is weighing heavily in the market sentiments. Although the non-farm payrolls would be coming out by today, so on the other hand, we would just looking at the majority of the major sentiments contrary to one single report, which is the non-farm payrolls. And basically the employment rate that most of the other analysts are again mentioning that the weather conditions here in the States were the main reasons why job growth would basically be on the soft side of the market. Not to mention the most recent reports that Staples, Radio Shack closing some of their stores, and the decline in jobs with JP Morgan, and hopefully not another financial crisis which has um, showed up as far as Citigroup's involvement with the Mexico's Banamex, which basically have swindled some of the funds provided by Citigroup with Banamex Group in Mexico. But that's beside the point. However, the most recent catalyst that the market had absorbed is the comments made by ECB President Mario Draghi that provided a strong movement for the euro in itself, although, as we have indicated earlier prior to Draghi's comments, that the lead currency pair initially prior to that report would be the dollar yen movement. And that's also the reason why we have chosen the cross rates currency pairs with the Australian yen, the sterling yen, with a contrary cross trading with the euro pound, which we earlier did short due to the penetration of the price level around the 83.50 last February 12th. However, as indicated here in our analysis, March the 5th, okay, that after being able to short the euro pound and eventually landed here on the trend line support of the symmetrical triangle, although like we have mentioned here that the euro pound was on a negative territory, rather on a downtrend, where we had looked at the 0.8150 as a key price level where significant prices recovered up here back to the 0.8279 level and down again to the 0.82 even 05 level. Now that when the remarks from Mario Draghi was released in the market on his speech, it recovered back to the 82.79.80 level, which we would show you. However, upon that particular fundamental, like what we have said, no, closing the liquidation would be initiated, which we did when the prices made an opposite directional move back to the 0.8270 level, where we were looking at a key resistance at 0.8350 again above this price level, which we would show you. Okay, which obviously have already penetrated that particular triangle formation. Now let's go back to the charts. So here, with the euro pound currently working at 0.8285, where that particular initial 2-point channel resistance have already met its initial target, which is basically in line with what the previous price here, which is the high at 0.8298. See if we can get it right here. Nope. There you go. The high of 0.8298 with a low of 0.8179, and here is 0.8156, now with a high at the level of 82.93 with the channel resistance at that level, 0.8296, slightly a little above the current price level. And looking at these levels now, the first initial penetration of a triangle would normally trace back and pull back lower, being that of a Friday 2. Lesser volumes would be made or simply liquidations would be taken. And just to show you the comparison with the euro dollar in itself, that led the move, which was due to the statement made by Mario Draghi, the high at 1.3748 and currently working at the resistance price level of 138.74, which is actually what it has been targeting initially. Now comparing that with let's look at the weekly on the euro. As we have mentioned before, that the market squeeze here on a weekly basis showed, however, the tendency for it to move higher was still there, simply because of the previous good reports coming out from the Eurozone area, and currently right now is smack at the resistance price, which is basically 1.3880. Looking at it with the pound, comparing it with the pound, as we have made mention, the key price level here to look at is 1.6712, and the current price right now is 1.6749, slightly above its particular price level. We do maintain our stand with the pound still has some room to move higher, although like we had made mention that the particular non-farm payrolls numbers would be coming out. So switching back now, in comparison with the sterling yen, because of that particular strength in the pound, although just a side note that well, of course, we do not have that particular chart as far as the British pounds options market or the chart in itself. Some of you who would have the chance to do some due diligence and look at the options market on the sterling pound, that you would see that it has increased its market, especially so for call options in anticipation of the increase in interest rates in cable in the medium term outlook. Now going back here to the sterling yen, that particular move have influenced more by the dollar yen's movement rather than the pound. In spite of that move, the dollar yen, when we look at it here, the opening gap that we have been mentioning the previous day, and this particular cluster island became a reversal point as far as a technical perspective is concerned, plus a follow through, which seldom negates the after a consolidation from a low to the high, another low to another high, and a low lower than the previous. However, it's right smack on the support, which is here, right here, based on the tip of the apex of a triangle to the next level, which is the support line from a market squeezed again, although this particular pullback already has given a signal, but 3 weeks of flip-flopping by other investors and traders simply because of the uncertainty provided by the news that manage these prices to move back down and move back up again, that provides other analysts a little bit more confused than normal. But however, if you look at it, the overall scenario on the monthly on the dollar yen from a triangle formation, even if you want to consider this as a pennant, and a bullish triangle penetrating on the high, a slight correction, and moving back again to the 105 level are more likely happen, but not as immediate as it may be for now. And going back to the daily, of course, as far as the dollar yen is concerned, it still has the potential, although since it's a Friday and non-farm payrolls will be coming out, there's still a possibility for limited corrections and pullbacks, but eventually the sterling yen would have already started correcting, although its initial target would be looking at it on a weekly basis. Let's see that there is a possibility that 173.66 would be next in line. Although with this said, since that particular formation on the yen on a weekly basis already have achieved, once it starts reaching this resistance level, as far as dollar yen is concerned, anything above would create a possible selling divergence on a technical basis. And by watching the volumes and open interest in the futures market as well, and the commitment of traders report, then we would be able to find out by the end of March the total volume and open interest on both sides of the markets by commercials and non-commercials as well as speculative positions. Now going back to the daily outlook, comparing it with the Australian dollar, the Australian yen, we'll come to the Australian dollar in a few minutes. It has indeed reached a certain resistance price, but although looking at now more on, switching it back to the weekly, it basically has reached its initial resistance level at 93.47. Okay, so comparing that with the Australian dollar on a weekly basis as well, so at least we'll have a better picture as far as the overall outlook. It's almost nearing a 50% retracement on the Fibonacci. Hold on one second, please. Let's see if we can get this right. So we're nearing the 50% retracement level here on the Fibonacci. And looking at now, the possibility to move higher is still there. The angle of inclination is much stronger with better reports coming out from the from Australia, although they have not moved as far as the rates is concerned. But considering this outlook here on a weekly basis and on a daily, the possibility for the Australian dollar to move higher is still intact. Now, with that said, considering that it's a Friday and non-farm payrolls number, although we have already made the liquidation on the initial euro pound, and when we compared it with, hold on one second, let's go back to this position that we had, and basically on the way up it was liquidated. As far as the sterling yen is concerned, taking out the secondary position that we did on the way higher, simply to cover up and unload a few cashing in would have been more logical instead of leaving 5 contracts here, although the non-farm payrolls will still be coming out, but taking it out is more logical, and unloading the euro pound, maintaining the positions on the Aussie yen. And again, because of this 3 cross currency pairs which we have chosen, and we still maintain our cable position until such time a real serious fundamental would otherwise say get out. But at this point in time, since we're also reaching within our book squaring, quarterly book squaring for the month of March, that's why we made mention here that the total volume and open interest for the month of March to support our analysis moving forward into the second quarter of 2014 is very important, simply because of it would give us an indication of where the US dollar index would be moving. Although we do have an idea that such move gradually after a major move lower would consolidate again until such time a slow moving uptrend would be made on the second quarter of the year. But it all remains to be said and done. It's always easy to say and how the market moves after it has moved, whether we bought or we sold. But what is more important is how we would be able to speculate or predict, forecast the next movement in a major market. So therefore, without further ado, it is more logical now to at least cash in half in the market, wait for the non-farm payrolls, let's see if we can get this right. Okay, let's modify our to a market execution, closing out both of them, leaving one behind, and the cable here, risking this, we'll probably take it out. But let's take out one. And leave the other one. Still well worth it because we're maintaining other positions here in the market. But leave out the Euro Pound as is. So for now, with that said, this particular execution has been done, leaving just a few in the market and switching it over to the next level where non-farm payrolls will be coming out later on, and simply be on the sideline and watch. I hope this video basically helps one way or the other as far as the outlook is concerned. Although, like we have said, the pound and the euro has a real potential of the market, but since it's a Friday, play safe, play smart. Most logical thing there to do is don't be greedy. Anyway, only the best for your trades, and thank you very much for spending your time with us. Have a good weekend ahead. Cheers.